What's up everyone, it's Caddy with MoneyVest. So markets here pushing higher very nicely, rebounding from their support levels. In one of my videos over the weekend, towards the last 10 seconds of one of the videos, I made a prediction for this week. I'm not one to make predictions, but in that video I did towards the last 10 seconds. I wanted to see how many people actually watch my videos all the way through the end. So if you did get that, and of course, you are taking advantage of that prediction, of course, trading on that. Congratulations, you're doing well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month that you can take advantage of. And of course, get alerts, get members only private videos, intrinsic value spreadsheets, trading view charts. Everything is going to be included, as well as a lot of other educational benefits as well. So there's only 9 days left if you want to take advantage of that 16% annual discount. Link's going to be down below. So this right here, markets snapping a 4-day losing streak. Tech shares rise despite the higher yields. So Nasdaq, S&P 500 end Monday in a green note here, with the Nasdaq rallying over 1.6%, S&P inching up over 30 points or 0.7%. And the Dow Jones was up, or basically shed nearly 37 points or 0.1% lower. So we did see a little bit of a pullback in the Dow, Nasdaq, and of course S&P getting bought up. 10-year Treasury yields hits its highest level since 2007. So we are seeing a lot of momentum for a lot of these treasuries. And despite the yields going higher, markets continue to get a little bit of a rebound here. So 10-year yields now inching up to 4.34%. The 2-year sitting at just under 5%. We got 1-year sitting at 5.4, 6 months sitting at 5.5. We got the 3-month 5.4, 5.4, and the 30-year sitting at just under 4.45%. So very, very substantial moves in the treasury market, in the yields for the US. This right here is another potential concern and a problem that we have been talking about very briefly, but we haven't touched on it as much. As India goes through a lot of export bans, this obviously is causing problems with respect to food prices, because as we know, India is a global hub when it comes to agriculture export, and rice prices are soaring, fanning fears of food inflation spike in Asia. So rice prices surged to their highest in almost 12 years after supplies in Asia as primarily staple food were limited by India's right export ban and adverse weather conditions. Not only rice, onions. So global onion prices could be set to rise, with India slapping on export tax on domestic production as well. So India has slapped a 40% export tax on onions on the back of higher domestic prices, and retail prices of onions in India have risen around 20% year on year, averaging at around 30.72 rupees. That's 37 cents per kilogram on August 19th. So that is going to put an upward pressure impact on inflation. We cannot ignore it, because inflation is, again, the key driver for everything right now, with interest rates and unemployment and markets expectations. Everything is being driven by where inflation goes. Inflation, on the other hand, is being driven by energy prices, food prices, and shelter prices. Energy's been pushing back higher as the OPEC plus nations continue to cut production and slap these production cuts and supply cuts, and as a result prices increase. And then you also now have on food prices on this end, you're getting these export bans and taxes on domestic production, which obviously is going to discourage farmers and agriculture production in India as well. So that is something to keep in mind. That's obviously going to put some upward pressure on overall inflation. But nonetheless, we talked about how there is a possibility of a potential dead cat bounce after markets coming down to their respective support levels. S&P, Nasdaq coming down to a very, very nice support level after getting a pullback / a dip. And now we're seeing that momentum back higher. But the real question is going to be whether those moving averages and those resistance levels act as a resistance, or the bulls have it in them to break us out and regain that momentum. That's going to be the real question later this week, which I'll go over in the technicals in just a minute. But Nvidia rallying over 8.5%, several upgrades coming in for Nvidia. Tesla rebounding very nicely, up over 7.3%. Meta up over 2.3%. Broadcom, AMD, Amazon, Apple, Microsoft, Google, all of them pushing higher here on the day. So again, a little bit of rotation out of some of the other parts of the market. So you'll notice consumer defensives and healthcare and real estate and energy and materials, utilities, financials, all these sectors getting sucked out of liquidity, and all that money once again going to tech. This right here, again, is the entire market. So technology is the clear leader, including biotech. And you'll notice technology, cyclicals, and comm services, the three big tech sectors, all pushing higher. And over the last 1 week, of course, everything is still red. Over the last 1 month, energy and comm services are still the big leaders on the last 1 month here. So feeder cattle, live cattle, wheat, palladium, we got coffee prices, cotton prices, everything pushing higher, with natural gas, orange juice selling off, and lean hogs also pulling back pretty substantially. And Bitcoin just a little bit over 26,000, Ether just over 1,600 as well. So going over to the markets here, so crude oil, once again, stabilizing a little bit, just getting rejected at that resistance of around $80, $82 a barrel. So this right here is going to be that resistance to watch for crude oil. And of course, we do also have Bitcoin here just selling off pretty aggressively or consolidating sideways at the moment, sitting roughly at around 26,000 for BTC. And of course, for Ether, we're also sitting at just over 1,600. We did break down pretty aggressively, and now we're just sitting on that 300 simple moving average, also in line with this previous support at around 1623, 1630 for Ether as well. Volatility, on the other hand, did pull back down about 87 basis points, but it's still stabilized a little bit, just over 17. So we still may have that potential to get up to 20 levels. And that's just going to mean that we are getting a rejection on the S&P and the Nasdaq at those moving averages. So this right here is the rally back higher today on the S&P. Very strong momentum coming in, 70 basis points. And we literally talked about this support. We talked about how I wouldn't be surprised for the S&P to come down to that support at 43.30, 43.50, and of course get a bounce back higher. But now the real question, the most important question perhaps, is whether the bulls have it in them, whether we've got the momentum to regain control over these moving averages. Let me just point that out, because right now where we are is a short, medium-term downtrend, right? Because we were in this consistent uptrend, making higher highs, making higher lows, consistently pushing higher. Well, then guess what happened? We broke down those moving averages, started making lower highs and lower lows, and trading below those moving averages. And so right now we are once again going to try to make a test. This is going to be a test for the market, right? Whether we see a breakout back above those levels to regain that momentum, or are we going to get rejected? And a lot of that is going to really come down to Jackson Hole, because in the next few days, I expect the markets to maybe, kind of trade sideways a little bit, be unsure of where they want to go, because everything's going to be hinging on the Jackson Hole Economic Symposium. So I wouldn't be surprised if the markets kind of trades sideways, maybe even gets a retest up to 44.50. That's going to be that level inside the circle, and then the real test, the real game begins on Friday, August 25th at 9:30 a.m. Eastern. That's going to be the final day for us to really understand whether we get a breakout or we get a rejection, and then we make our way back to that support inside this green rectangle. That's where my technical analysis All right, everyone. So my laptop pretty much died, so I had to restart. But as I was saying, very, very important level of resistance to watch at that level at 44.50s for the S&P 500. Of course, support level is going to stay put at 43.36 for the S&P as well. Just got to make sure that I'm still recording. Everything's going good. Perfect. Audio, video. All right, so moving over to the Nasdaq, ticker symbol IXIC, once again getting a lot of momentum from that support we talked about, coming down to its 100 simple moving average and that support of 13,200, so getting a lift back up. But again, the real question, the real test for the markets are going to be whether we see a breakout once again at those moving averages, perhaps even this resistance of 13,800, to see that momentum once again come back into the market and regain some of that momentum once again. So right now, I want to be very clear that we are still in a short-term downtrend. We broke down, we came down to that support level. We're getting a little bit of a rebound from those levels. So that does not change the fact that the markets still broke down below those moving averages. in the short term, and we are still in a downtrend. This happens with every downtrend. You will see days like these. You will see market rallies within the concept of a downtrend. So that doesn't necessarily mean that we're out of the woods. It simply means that we're seeing a rebound. And of course, we get up to that resistance. That's where the real test is going to be for the market, whether we regain that momentum or we get rejected. That's the real question that we're going to find out very, very soon here. Talking a little bit about Apple now. And Apple on the day also moving back higher, so 175, 176. It's still broken down below 177 here, so that is going to be that next resistance to watch for this stock, obviously. And we are incredibly oversold with the RSI and the MACD also suggesting very, very oversold levels. Talking a little bit about Amazon now, and Amazon also up over 1%. So this right here is going to be that resistance at close to $137 per share. So that right there is going to be that level. And of course, support level is going to stay put at roughly 126. So that right there is going to be that support. Of course, resistance up to 137 all the way up to 146. And we have entirely filled that gap after the earnings. So that is really good. Tesla, look at that. Demand is stepping in. Not a surprise. We talked about this green rectangle, this right here, the circle that I pointed out. Very, very strong resistance, very, very strong area of demand. Of course, buyers are once again stepping in, pushing up over 7%. Everybody's happy. And of course, oversold on the RSI and the MACD as well. So no surprises here. This right here was an area of demand. This was an area of support. So it makes a lot of sense why buyers are finally now stepping in for Tesla once again. Talking a little bit about Nvidia here. Nvidia continues to get upgrades after upgrades and yet another 8.5% rally. They are going to be reporting earnings here on Wednesday. I've already done a video on Nvidia. Make sure that you do check that out because it's all going to be dependent on what they end up reporting. And guess what? Nvidia is an anomaly. It could easily, not easily, but it could in the future get up to over $800 per share or $2 trillion market cap. But that would just be insanity, in my opinion, and it's going to be like a 1 in a billion type story. Like not every company is capable of doing what Nvidia is doing, both from a fundamental standpoint and from a price action standpoint. So don't take Nvidia and put them on this pedestal where every stock is going to replicate Nvidia, because it's not. Nvidia is an anomaly. It's one of its own kind. It's a rare company to be doing what it does. Okay? Don't take Nvidia and make it a rule, right? Nvidia doesn't make the rule. Nvidia is in its own category doing incredibly well, but that still doesn't mean that you can disregard price and valuation and just expect every stock to behave like Nvidia. So resistance is going to be at $480, support level at close to 403. And of course, this right here is going to be turned into a support once again. And of course, we got all the way down to these moving averages, 100 SMA sitting roughly at 367 for this company. Advanced Micro Devices, on the other hand, also getting a little bit of that lift back over $108, up over 2.6%. So we'll go ahead and turn this level into a support for Advanced Micro Devices, and resistance all the way up to this lower high, sitting roughly at $112 per share for Advanced Micro Devices. And of course, we got support all the way down to $80, and my fair value also at $80 for Advanced Micro Devices. PayPal here, just a little bit under $60, so still trading in and around those levels. RSI, MACD, very, very oversold. Support level is going to stay put at $57, $58, so this right here is going to be that level to watch. And of course, we got those moving averages in a consistent downtrend after the earnings, huge gap down, and we got a lot of those moving averages to basically tackle eventually, and we got a huge resistance sitting at $70, $71 per share. Talking a little bit about Square, and Square also getting a bit of a rebound. I am going to be mentioning this in our Discord very soon because the risk reward is perhaps the best it's ever been for a very long time on Square. So we are trading at that level of support, at that area of demand, oversold RSI, oversold MACD. So we got a resistance up to 59 to as much as 62 to as much as $70 per share for this company. Talking about Meta platforms, Meta also getting a bit of a rebound. So again, it was in this short-term, medium-term downtrend, breaking down below those moving averages, and now getting a bit of a push back higher with an oversold RSI and MACD as well. Resistance is going to be up to $299, close to $300. So this right here is going to be that level to watch for Meta, in line with those moving averages as well. Talking about Netflix here, and Netflix also getting a little bit of a lift, up almost 1%. Resistance is going to stay put at 409. And of course, you got to support all the way down to this green rectangle, sitting roughly at $380 per share for Netflix moving forward. We're seeing a lot of consolidation sideways, but resistance is going to be at 408 all the way up to $458 per share. So those right there are going to be some levels to watch for Netflix. Lots of consolidation right now. Not quite oversold yet. Maybe the MACD is not so much on the R side, but resistance, like I said, is going to be at 410. Talking about Google, and Google also here, once again, validating that support at 127. So that right there is going to be that support level to watch for Google, and resistance all the way up to $131, $132. We're seeing a lot of consolidation sideways for Google. So, this is potential, area of accumulation, but of course, fair value is going to be low 90, like basically low 100, sub 100 is where my intrinsic value is going to be for Google. So support level is going to be 127 all the way down to 115 for this company. Talking a little bit about Microsoft now, and Microsoft definitely getting a little bit of that momentum back up, 1.7%. Resistance is going to be $322, so this right here is going to be that level. RSI, MACD showing signs of a potential rebound here, so no doubt about this rally, no doubt about this momentum back up. And we've got those moving averages sitting at 328, so we still have to break past those moving averages to regain some of that control, regain some of that momentum for Microsoft. Once again, resistance and targets all the way up to 351 for Microsoft. And finally, we got Shopify, also getting a move back up over 1.5%. RSI, MACD oversold. Resistance is going to stay put at $54. Very similar to Apple, like kind of hinging on their support for a very long time, then breaking down pretty aggressively, then getting a dead cat bounce. Now the real question is whether we break out above that resistance or get rejected once again. And end phase here on the day, underperforming dramatically, only up or actually down 14 basis points. Definitely not seeing the momentum that a lot of other stocks were seeing. 128 is going to be that support right here, with the resistance all the way up to 151 for end phase. But of course, it is, in my opinion, one of the higher quality, better risk reward trade-offs in the market compared to some of the other stocks out there. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts.